We're live. Thank you, everybody who was waiting for us. We made it today.
Hi
Welcome back.
there.
Welcome back to my podcast. And today I'm in my studio and with Jean Ake, who is from Wintrust Mortgage. And today we will talk about how to help you guys to to purchase house in 2026. Probably if you will stay with us until the end of the podcast, you will know how to make it better, save some time, not spend months of stress, and possibly save for thousands of dollars. Uh, Gene has 30 years of experience, and I'm very excited to talk to him about all new opportunities, what might happen in 2026. Gene, can you share how long you was doing this?
Uh, yes, thank you, Lana. First of all, I just want to say thanks for the opportunity to participate with you in something that I love. Yes, I've been doing this many, many years. This year is 32 years. I've been in the lending field, and we've been doing this a long time. And I still very much love what I do. I started this career because it's mathematics. I've always enjoyed mathematics, but the biggest part of it for me is taking something that is can be stressful, it can be very emotional, and can be a lot of anxiety. And my hope and mission in every loan is to help people find a way to have the confidence to buy a home, whether it's this year or next year or whatever. And that's my mission every single day. And so that's why I love so much about this business.
Well, sounds fantastic. And buyers, stay with us to the end because Jean will share at the very end smart advice about how to get approved, pre-approved this year with less stress. Let's talk about affordability. Jean, I'm working with a lot of clients who is confused because prices in the metro area, let's say average sale price is 270,000. And some younger buyers, they saying that they cannot afford to purchase the house. Can you tell if current rate with little improvement will affect purchase the house, or how it may help home buyers?
Yes, I can help. Interest rates are something that the first thing I need to tell people is that it is a moving target all the time. Every single day we are given interest rates about 9:30 in the morning. It is something that everyone's worried about, but so we have to talk about generalities for interest rates because there are many parts that go into somebody's interest rate. Their overall credit rating, their overall income, their how much money they're putting down, the purpose of the loan, what is it, an investment property, is it a primary home? All of that can change interest rates. But in general, right now this week we're seeing interest rates at 6.1% for your standard 30-year fixed conventional loan. And that's very exciting for us in our field because that is 1% less than it was a year ago. And so that does create a lot more affordability. If you just some very basic math, 1% on a $350,000 loan is $300 a month less this year than it was last year. And so in many cases, that can make it possible for someone to buy now. So as far as the future is the next thing many people ask. And none of us have an absolute crystal ball to know what it's going to be for sure. But with our current administration, they do want to see lower interest rates. We are seeing relatively low inflation. And so many of us are expecting interest rates to stay the same or less going into 2026.
Very nice. Yes, from my perspective, I can hear same information. And even during last week, I can see that lots of buyers start searching for the houses. Had a couple of listings that were a little bit frozen over the winter. And this week, it's improved. Lots of buyers come back on track. What you would recommend to answer the buyers who is asking, like, what can I afford this year?
That is a very common question I get every day as well. And it really kind of depends on your income is the first thing we spend the most time on as a loan officer. So a slight variance in interest rate usually is not going to change your ability to know what you can afford. For example, on a $350,000 loan, 6.125% might be 21.26 a month for just the principal and interest. But
Okay.
if that goes up by 0.125%, the monthly payment only changes to 21.55, which is only $29 a month. So every 0.125% on someone's loan for an average of 350,000, it only changes by $29 a month. So that itself usually doesn't make something impossible to buy. What we really need to focus on is to understand how much income you have coming in the door, and we need to also consider the other parts of a payment. Things like the property taxes,
Okay.
which are different for every home. The homeowner's insurance has been increasing these last 2 years, and so that on an average home is running between $2,000 and $2,500 a year. So that can greatly affect your payment. And then depending on the down payment that someone has, mortgage insurance and homeowners association dues. So there's lots of parts that go into that payment. It's not just the loan by itself. We have to consider the affordability of all of those pieces.
I think it's a great advices for people, if they don't know where to start. So what do you think about what is the biggest myth for first time buyers they believe about qualifying for mortgage?
Thank you. That is a very common thing I deal with every single day. I would say the number one myth that I deal with is that someone has to have a large down payment saved up in order to buy. And there are many loan programs out there where you just simply do not need 20% down. If our average home is between 300,000 and 400,000, well, 20% is $70,000. There's not many people that have $70,000 sitting around for a cash down payment. But
Absolutely.
there's many aggressive programs that exist to help you get into that same home. For example, the state of Minnesota offers a down payment assistance where we can get an extra $15,000 to go along with the money you may have. Okay. A very common loan program this year for many of my clients for first time buyers was only 3% cash down.
Okay.
So 3% times, let's say, a $350,000 home, well, that doesn't add up to very much money. That's $9,000 or $9,000 to $10,000. So we don't necessarily need a large down payment. But the second thing I would say is a myth is that you have to have perfect credit. Well, that is a very large myth. The average credit score I see on a given day might be 718 for a score. And we have loan programs that we can write at even 620 for someone's credit score. So wide range of credit scores, but there's the biggest piece of the puzzle isn't necessarily just that credit. It goes back to what income you have coming in to be able to afford something. So.
Oh, this is wonderful. And actually, thank you for mentioning credit score, because actually this is my next question. So what people with not super great credit score need to do, to improve their credit score, and how long it's going to take to improve credit score?
Well, when it comes to someone's credit, a lot of people will look through different platforms that they might get through their credit card or freecreditreport.com, but those particular credit scores are not always the same as a bank credit report, and they may vary by 10 or 15 points. But to answer your question, one of the biggest things somebody can do to change their credit score is to understand what goes into it, and that requires a phone call with a loan officer to look at your credit report and talk about the impact of changing this or changing that or opening this or closing that sort of thing. So I would say the most common mistake when it comes to credit is that people feel they have to have many credit cards or many loans with balances. And that's not necessarily the case. The biggest comparison used, I would say, on credit in general is how much do you owe compared to the credit card limits. So if you have $1,000 credit card and you owe $1,000, that is not necessarily a good credit score. If you have $1,000 credit card and you owe, let's say, $50 on it, well, now that's a very good credit score. So it's the same account, but the balance compared to limit is by far the biggest comparison, in my opinion, that affects someone's credit rating. And credit cards are easy to get, and so are installment loans, it seems to me. So, okay.
Wonderful. Yep, absolutely. It's a great solution because again, this is a very common thing that holding buyers from their dream. And if they don't know where to start and how to make their credit score better, this is still making them wait. And we want to help them to achieve their dream. Would you share any impossible stories that you made for your clients? I mean, if clients were thinking that this is purchase not going to be possible, but you made it. Can you share anything from your experience?
Yes. One particular story, I can't share names, of course, but you and I had the joy of working with these people this past summer, where I was just talking to the customer, and they like 4 children, young family, and they've seen all the houses they want to buy just get sold so very quickly. And so they just did not feel like it was even possible. And we sat down and ran through their numbers, and we found a way to create what we call a bridge loan. And a bridge loan is something where we freed up the money from their current home so they can make a very aggressive offer on a new property. And in doing that, it allowed them to make an offer, which you can speak to our viewers here, but non-contingent, meaning it wasn't subject to waiting for one house to sell. We made it possible to buy the second one while the current one was not sold yet. And what that did for the buyers is it freed them up completely. We were able to buy a new home they wanted with an aggressive offer to beat out other people. And it allowed them to then declutter and move their stuff. And I believe you staged the home very nicely, and that sold very quickly as well. So those are very rewarding situations when I called them, they go, yeah, we want to buy eventually, but they were able to move right away to their dream home. So
yeah, it's a very common thing. Again, when I'm talking to my clients, when people having houses that need to be sold, and sometimes they own it free and clear. They don't have any mortgage, or they have a mortgage that locked like up to 3%. So they confused. They don't want to purchase because current interest rate, let's say it's 6 little bit plus %. And those people, they confused. They also don't know where to start. Would you give advice regarding if people want to buy and sell? So what their financial options would be?
Well, again, everything in our world is so much case by case based on someone's overall income and their credit rating, etc. But the term bridge loan has become very common, where we can free up some of that equity they might have in a current property, so they don't have to necessarily wait. Or maybe some people want to keep that house that they have at 3%, but they can hold on to it as a long-term investment and rent it out. And then that frees up some extra income to be able to afford the next place. So just because they have one loan right now, that doesn't mean they can't get another one on a newer property, maybe in a different area. Maybe it's a job change, maybe it's a location or a school district, all the many, many, many reasons to move. But so there are many different ways to structure these loans that we do for people, and the best thing is to chat with a loan officer and give them time to run the numbers with you so we can see what's possible.
Okay, good. Thank you. Thank you for some options for people who need to make some expertise and figure out their options. Would you recommend anything about the situation when buyers purchase the house, they still not close, but their offer accepted, and they moving through the process. I mean, what they don't have to do, because some people considering purchasing a new house and maybe considering purchasing a new car right away. And we realtors who helping and working with our clients just want to make sure that they're going to be fine and will be finally approved to purchase their house.
A very good point. And that can be a very stressful point for a lot of people in the process. And what I typically do with the borrower is I will give them a list of things that you do not do in the middle of the process, such as purchasing another vehicle, because that's a new payment, or using your credit cards to buy furniture, or spending some money you have set aside for closing. There's many different things that we'll discuss with you to not do in the middle of the process. But in general, if you do that early on, if you are thinking about a new home, even if it's 6 months down the road, a year down the road, to know exactly where your financing is at and your choices, it will empower you a great deal. It will give you some confidence to join with you, Lana, and go look at many homes and dream and focus on the kitchen and focus on the layout and how many bedrooms and the garage, etc. My mission every day is to take away the stress of the financing. So what works best, I guess, is to know that you have plan A, B, C. And if you got 3 different ways to do it, it makes it a lot more fun to spend time with Lana to find a new home.
Thank you, Jean. It sounds very helpful, because sometimes when I'm talking to my clients, I want to be upfront and all the time saying, talk to your lender, you have to do what your lender gonna tell you. Don't do anything extra. What you gonna recommend, or what is your opinion if people saying and asking this question, should I buy right now, or I should still wait? We realtors, we using this phrase like date the rate, marry the house. What is your opinion?
Yep. I very much agree with that phrase. You date the interest rate, but you marry the house. No matter what it is, the house is where you're going to be living. So the reason to buy, where you buy, and what you buy, it really is the priority, because in 32 years of lending, I've experienced 9 different cycles where interest rates will come down a great deal. Yes, in 2021, we had 3% interest rates, but it's very, very common. Like today, we may be at 6, but it's very common to expect future interest rates to be 4, 4.5, maybe 5. And so if you're in the home now, well, you're enjoying the home for what it is. So that means that's the marry part. That's marry the house, buy it for what it is. The interest rate, if you're able to qualify for the loan now, you're probably going to qualify for a refinance to get a lower interest rate and a lower payment. And in my career alone, it's happened 9, 10 times. So it's very, very common to expect interest rates to eventually reach a lower point and a better payment. Another thing to consider there is on the average home of $300,000, well, a year from now, that could be worth 5% more. So 5% is another $15,000 that you have to finance and deal with. So even if the interest rate is lower, well, you're borrowing more money. So the payment isn't always better to wait. So, and life doesn't always wait, right? The kids keep growing older and job change, schools, whatever it might be. So in general, buy the house for what it is. That's the marry part. You date the rate. Well, there's always going to be options in the future, and a high probability that we can refinance something to make payments better in the future.
Wonderful. It's like we are acting completely with the same understanding and helping people, to know better what is the market and how to purchase house. So for people who are staying with us to the end, like we promised, could you make the biggest recommendation for 2026, what people need to do to get pre-approved?
The number one thing that I recommend to everyone is to know your numbers, meaning spend the time for a phone call just to talk to a loan officer like myself or whoever and understand what your income, what your payment range should be, so that when you go out onto the market and you're looking for something, you're very, very confident to know what the payment range is going to be and how we're going to get there. Meaning, what steps are we going to take in the financing to get there? So it's the old adage, cart in front of the horse. Okay, if you're looking for a house and you don't understand your numbers to start, it can be very frustrating and very confusing, because maybe you like something and then we can't finance it for some reason. So have the confidence early. Get together with a loan officer for a pre-approval, and then we'll take it from there. And you spend your time looking at all the features of these new homes in your new life.
Great. And I still will ask one more questions, because I'm working with my clients and I'm trying to do my best to make them pre-approved before they start looking for houses. But I heard the story that some buyers prefer start looking for the houses and they're not getting pre-approved. And then when it's a moment to make an offer, they get in some trouble because they cannot get pre-approved. So what would you recommend regarding this situation?
We run into this quite often, because the excitement of a new home is more than the work of getting a loan. And maybe that's it. Maybe people don't like the process of getting a loan, but at least with myself, I mean, I like to just start with a phone call, understand your situation, work the numbers, and give you that confidence right away. Because yes, we've all been around long enough to be in that situation where we can't finance something, and a week before closing, we have to say no because of some reason, maybe income changes or credit changes and things like that. So that is very frustrating in our industry, as well as a stress on you as a buyer. Okay, so we don't want that stress on you. We just do not want that, because if you're buying a home, somebody that's selling it is probably buying another, and the people after that are buying another. So sometimes we call them dominoes. Sometimes many homes in a row will not close, and it can be very frustrating. So back to the beginning, cart in front of the horse. What kind of financing can we do? How do we do it? And once you have that confidence, you're going to find it's a much more enjoyable process.
And consultation is for free, correct? If people just calling you, this is a free consultation, and even they meeting you, this is free advice, correct?
Yep. We can review your credit. We can review your income. It's only when we get to closings that you have the major expenses of financing. So because it's free, it's relatively easy to do. And again, it goes back to the confidence to make an offer with your realtors.
Wonderful. So for people who stay with us to the end, please feel free to comment or ask questions below, because we can always respond to your questions. Or you can reach Jean Ake, Wintrust Mortgage, directly, or me, Lana Kalinovsky. I will help you with the home buying process, and Jean will help you with some mortgage options. Thank you for watching us, and see you on next episode.
All right. Thank you very much.